The US stock market has been surging for 6 weeks straight, and if history is any indication, this is just the beginning today. I am going to show you where the money is flowing, what areas I am focused on, and 2 new stocks I am buying right now. Now, I do this every week, so if you are not yet a subscriber, click the button, subscribe to the channel. That way these videos will show up in your feed. So let's look at today. Now this is the SP 500, and boy, what a roller coaster we were on today. The market gapped down this morning, sold off all the way until lunch, and then rallied to recover pretty much all of the losses. And the initial sell came from a new inflation report. U.S. Bureau of Labor Statistics announced that CPI Consumer Price Index inflation, you see right here, rose 0.6% in April. It does not mean inflation 0.6%, and it means the rate things were going up increased by 0.5%. And if you look at the official report, man, they make this stuff look boring. Unadjusted 12 months. So versus April of the previous year, inflation currently sitting at 3.8%. And a lot of this, of course, driven by energy costs, primary oil, and gasoline. But that does not mean everything is a loser. In fact, the recovery today is a really nice sign of strength. It shows that nothing can hold this market back. Not above average inflation, which typically lowers the odds we are to get rate cuts. Not a war with Iran, not a closed Strait of Hormuz, not rising oil prices. Despite all this, the index continues to paint new highs, and that is the kind of market you want to be invested in. So let's look at our industry strength indicator. Now this shows us it tracks the top 40 areas of the market, top 40 subsectors in terms of performance over the last 1, 2, 3, 6-month periods. And by the way, if you are not already a member, click the link in the description. We have made you a QR code down over there. Scan that. You can join it. Is $5 for the entire year. You will get this indicator live weekly, 1-hour sessions with me, access to my team, a ton of stuff. It is an absolute no-brainer. It is just $5. But what this does is show us what is rising the most. And all things being equal, the sectors of the market showing the biggest gain, the ones going up the most, are the ones where the big institutions are buying. That is what is leading the market. And semiconductors have been an absolute tier. A lot of these are very extended. However, you got Intel up over 200% in 2 months. You got AMD that is double. These are very, very stretched, but there is a couple of other areas actually rising up the ranks, and this is what I want to see. One of them, crypto and digital payments. It has been a crypto winter for my crypto guys out there. They have massively lagged, and now they are beginning to rise up the ranks. So it is one of the top performing areas over the last 2 months. Over the last 1 month, it is a big time leader. And there is a stock that benefits directly when crypto is strong, and that is Coinbase. Now, Coinbase is a crypto exchange broker. I do not know their fans, but it is where you go log in, you buy, and it stands to reason when Bitcoin, Ethereum, and the crypto coins are surging, more people are opening accounts, more people are buying, they are generating more commissions, and when crypto is stalling, less so, and that directly affects the bottom line of Coinbase. So if you can time the moves in the crypto market, let's just overlay Bitcoin with this. Notice it moves just about lock, stock, and barrel when Bitcoin in blue rises. So does Coinbase. When it pulls back, so does Coinbase, pretty much moves together. And we have Bitcoin rounding out the bottom here, beginning to run higher, and Coinbase setting up to follow suit. So I think this is a stock we can buy in here on a breakout above this kind of 210 to 215 area. Tried to peek its head out there on Monday, pulled back a little bit today with the overall market weakness. But this is exactly the kind of shallowing formation we want to see off the lows after it has had a big decline. And this is a big decline. It is a 60 to 70% drop in the last year. You want to see that consolidation. You want to see it absorbing that supply, forming this kind of rounded bottom. You want these dips to become shallower and less severe, and then it should break out and push higher from there. So if I bought in here at a break of 220, I would be targeting kind of this 275 range for the first piece, followed by a big target of more like 320 to 340 right up in here. So I think Coinbase is viable on a breakout above today S high. So above $218, I would put a stop at the low of that. You have the support of the 10 to 50-day moving averages, and you should have a nice clean run higher assuming crypto stays strong. Now, the other stock I want to look at is in the rare earth sector. Rare earth metals are another one that gets really hot, really cold, but notice it is beginning to rise up these ranks. In fact, over the last year, it is the leading group of the market, second being semiconductor, so it is not a group we want to let go. And one stock in this group is Tronix Holdings, ticker TRX. Now, the relative strength rating on this, you can see, is a 96. That means in terms of price performance over the last year, and it kind of front weights the last quarter it is, outperforming 96% of stocks in the market. So it has the things we need. We want high RS. We want a stock that is leading. And when we get a little bit of weakness, and I guess this morning is the closest thing to weakness we have seen, I want to buy this on pullbacks. And if you go back and look here at Trox, it is a bit sloppy, but you see kind of the same thing we are looking at in Coinbase, where you get the big decline, it forms this rounded bottom, kind of compresses, tightens up, and then breaks out and pushes higher. So here is the breakout and the rule for these new stage 2 breakouts, especially strong ones like this that are running 30 to 50%. Always by the first touch of the 50-day moving average. So the two lines on my chart, this is the 200-day simple moving average, this is the 50-day simple moving average. Notice back here in March, it came and just kissed it and surged higher, continue to print highs, pushing right to it right here. I think this is a perfect pullback buy in a very strong market in a very strong group. And you can buy it in here and not risk a ton of money. I mean, it is sitting at around 8.78 post market. I can risk call it 7%, maybe stop at like 8.15. And it is also through earnings. It had an earnings report on last Wednesday. The stock dipped into the 50, holding right in there, consolidating. So I think it is a great time to add on. So I am recording this after the market close. I wanted to see how today shook out, how we finished. Obviously, if you have a big nasty down day in the indexes and you close near the lows, and this is true for stocks as well, the odds of a continual push lower the next day are much, much higher. So if you get a big nasty in a stock, it closes the low. Odds are it is going to keep going lower the next day. Same thing closes the high. But as we looked at in the beginning, the market actually recovered the bulk of the morning dip. So feel a lot better about the market here. So I think I can place a buy. Let me do like 1,000 shares here. I am not going to buy it post market because look at how wide that bid ask spread is. 8.65 by $9. No, thank you. You are not going to sucker me in on that, but I can do an at the opening buy. So it is called a market on open order. Now, I'm going to check this before the market open just to make sure the thing has not absolutely fallen out of bed or something, but all things being in all likelihood, it will be right there. So I am going to go ahead and send this. I will check that in the morning. I want to get filled. I will go ahead and place my stop loss order on that. So that is the two stocks I am looking at. Coinbase and TRXtronics Holdings, two different groups. Now, I will show you one more thing, and I do not mean to scare anybody. I think the bull market is still well in effect. In fact, I think we'll be materially higher 3, 6, 12 months into the future. But we are in the area where we could start seeing a pullback. Let me go back to my charts and show you this. If you look at the SP 500 and we just draw this back, let S put it in logarithmic scale from these peaks where the market tends to get extended. You will notice we are kind of right there near that upper band right there where stock tend to kind of pull back. So on a large enough scale, sure, stocks are going to revert to their mean, continue trending higher. That is why just dollar cost averaging for 30 or 40 years is always going to work. But in the near term, we are up massively since the 30th of March low. The entire SP index up 17%, which is huge for the largest equity market on the planet. I am not saying we are peaking. I am not saying we are going to crash. I am saying we could see a small kind of stall pullback hesitation period in here, which would be more than welcome by me. It would allow these stocks to set up new bases to compress to get ready for the next move higher. But I tell you all of this to say I have been very, very aggressive on these positions. I am going to take about a half-size position on this. So this was like a $20,000 buy in IPX. I am generally been doing about roughly 20K per S-swing trade. I'm going to set these back to about 10 grand. Now, your numbers may be different. You may step down from 200 grand to 100 or from 50 bucks to 25. I do not know, and I am not telling you what to do, but just for me, when we get kind of extended, when the market gets a bit extended, and I think we are due a bit of a pause consolidation there, I am going to begin to just size down a little bit, so just wanted to offer that to you. Do with it what you will, but still taking these two trades. I will let you know how they work. If you are not already a subscriber, be sure to click the link to subscribe to the channel. And again, that $5 Black Ops special still going on. Just click the link in the description, scan the QR code, or go to tradewithross.com to get signed up. I see a lot of you guys asking about how I manage my long-term portfolio versus these swing trades. Look, my core is always going to be the boring stuff. I am talking about VU and VTI every single paycheck, regardless of what the CPI says. But when I see these institutional flows moving into sectors like semiconductors or rare earth metals, I want a piece of that action. It is about balance. You have your foundation, which is your passive index investing, and then you have your satellite positions where you are trying to capture these massive stage 2 breakouts. Right now, the market is telling us it wants to go higher, but it is getting a bit tired. That is why I'm telling you to watch that 50-day moving average. If a stock you like is sitting 20 or 30% above that line, you are late to the party. Wait for the pullback. Wait for the touch, just like I am doing with TRX. It is hard to sit on your hands when you see green candles everywhere, but the best traders are the ones who can wait for their pitch. The crypto market is doing the same thing. Everyone was calling for a crash, but Bitcoin just held those lows, and now Coinbase is looking ready to pop. I am not buying because I have a gut feeling. I am buying because the chart is showing me a rounded bottom and shallowing dips. That is objective data. You have to remove the emotion from your trading if you want to survive. The next decade, markets go up and markets go down, but the math stays the same. If you can manage your risk and keep your losses small, you will be ahead of 90% of the people out there. I am keeping a close eye on the housing market too because that affects everything. If rates stay high for longer than expected, it is going to put pressure on household debt. But for now, the corporate earnings are holding up and the jobs market is resilient, so I stay bullish until the charts tell me otherwise. I will be back next week with another update on these positions. Make sure you have your notifications turned on so you do not miss the entry points. Let me know in the comments what stocks you are watching right now. Are you buying the dip or are you waiting for more clarity? I read every single comment, so let me know your thoughts down below. I will see you guys in the next video. Stay disciplined and keep growing that wealth. Wealth is not built in a day, but it is built every day, and that is the philosophy we live by here on this channel, so let's get after it. See you tomorrow at the opening bell. I am ready to see how these fills come in. Good luck with your trades, and remember to stay safe out there. The market can be a beast, but if you respect it, you can ride it to the moon. Peace out.